Thank you so much for coming back. We do have one more video for today's series, and today we've talked about a lot of great stuff, but one of the topics that's a hot topic right now in the insurance world, as well as in the real estate world, is the age of a roof and what is considered insurable. So this is where I'm going to ask you, Hal. I have been given two different timelines for how long, uh, how, when will insurance companies say, no, we're not going to insure? How does that come to you? Like, is it a 15-year roof that, once it gets to 15 years, they won't insure it? Or is it 10 years? What are the criteria?
So every insurance company is going to have a different set of rules. And it's all based on what is their risk. Are they trying to grow their business? What do their losses look like? Are they, their agents doing a good job of bringing good business to them? That's good, profitable business. But even that, I mean, you have clients that live in their homes for 30, 40, 50 years, right? So the question always is, if I, as an insurance company, um, make a decision to insure your home, I expect that I'm going to be on that home for a number of years. So one of the challenges is, how old is the roof today, knowing that I'm probably going to be on this roof exposure for the next 5, 10, 15 years. I'm not going to want to get on a roof that's maybe 20 years old, knowing that if they don't do anything, that roof could then be 30, 35 years old and nothing's ever been done. So one of the challenges you have really with home ownership is, whose responsibility is it to um, maintain and update the roof? People don't, they think of their exterior of their house as it's going to last forever. Roofs are a lot like the tires on your car. They're only designed to last a certain number of years. So most warranties are 20 to 30-year roofs, right? So what we're seeing is people let their roofs get 25, 30 years old. They haven't saved. They're not ready to do it. So they're praying for a hailstorm to come so that the insurance company will buy them the new roof. And in the meantime, they're like, well, until that hailstorm comes, I'm just going to deal with it. Well, the insurance companies don't want to be on that because, right, you're going to pay $2,000, $3,000 for homeowners insurance, and then they're going to spend $25,000 to get you a new roof. So I said all that to say a couple of things. It really varies by insurance company. Some companies are only willing to take on roofs that are 10 years old or newer. Some are 15, some are 20. Different companies also say, well, how much are we willing to pay? Are we going to pay, if you've got brand new tires on your car and then the tire pops, if you bought that insurance, they're going to buy you a new tire. But if you've put 60,000 miles on that tire, are they really going to buy you a brand new tire? They may or they may not, depending on the insurance you buy. The insurance company in the industry is changing to where they're saying, well, there is wear and tear that naturally happens. That roof is only supposed to last a certain number of years. So once we've kind of gotten a certain point, we're going to depreciate that and we're going to start to pay you a little bit less on that roof. So if the roof is 25 years old, maybe they're only going to pay 50% of the cost to replace it. And you're going to have to pay the other 50%. If it's 15 years old, so it's usually 10 to 15 year mark, they'll start that depreciation process. And it's a scale. So they might pay 100% for years 1 through 15. Something happens to the roof, they'll pay a full cost of replacing it. Once it hits 16, 17, 18 years, maybe they're going to pay 90% or 85, and all the way down to like 15% if you got a 30-year roof and you've been insured with the same company. A new company might not take you on, but the old company would. But they're like, but we're still only going to pay 25% because at some point you should be replacing this roof yourself anyway. So
Okay.
it's every company's a little bit different on the risk. Everybody's different on their scale, and some people are different on whether or not they'll offer replacement cost or depreciated value.
Well, that sounds great. And I'm glad we're having that conversation because this is a topic that seems to come up more and more lately. And I feel like it's an education that some people are just not even aware. that this is an issue that's going on, and I think it's important to know.
I would say starting in about 2017 or 18, this really started to change. Prior to that time, everybody just covered your roof and it was covered at full replacement cost. So if your roof was 5 years old or it was 30 years old, didn't matter. If a hailstorm came through, they were paying the entire cost. But as we affectionately call them storm chasers. As the storm
Mhm.
chasers, kind of when 2008, when the housing crisis happened, a lot of those people lost their jobs in the construction industry, and they found jobs, basically construction jobs, when storms would come through and they would create all this damage. And so it became a bigger challenge within the insurance industry. Everybody was, oh, a hailstorm came through. It could have been pea-sized hail that did no damage, but the hailstorm guys were coming through and saying, "Hey, there was a storm that came through last night. You should put in a claim." And they weren't telling the homeowners the downside of putting in a claim is what if there wasn't any damage, or what if there was damage and the insurance company paid out, then you lose your claim free discount at that point and your rates go up a little bit. And as if an entire community, entire group has their roofs paid out, and the insurance company has to pay out, the insurance company then says, wow, we had to pay out a lot, we don't have enough money again, so now they have to raise their rates a little bit. So people are like, hey, why did I have to pay more for insurance? I didn't even have a claim. No, but all your neighbors did. And so we're all a big community, and so all of that does affect us. So again, the insurance companies have started to make changes to those situations in probably the last 5 years, as they started to deal with, the biggest expense that they have right now are going to be the backups of the sewers and drains and the roof claims from hail damage or windstorms or whatever, whether or not they had damage or they didn't.
Wonderful. Well, I'm so thankful that you were willing to take the time to listen and talk and all the rest. And I also want you to know, as a viewer, my hope is through these videos, we are helping educate you and become a better buyer and become a better seller, because obviously that's what I do. But to know that I network with really good people that do what they do very well. So if in the future you're looking for advice or a referral, please reach out and let me know. And in the future, if you're looking to buy or sell, I would love to work with you. I would love to help you because I want to make sure you're doing it right. That's the whole point of this. We want to know we're doing it right. And thank you again, Hal, for all your help.
Thank you for the opportunity to talk to your community behind you.
Yes. Thank you, everyone. We'll see you in another video in the future.